Close to 70% of the population of India still lives in its villages, and it contributes about 35% of the total FMCG sales. So, for all fast-moving consumer goods or FMCG firms, a lot hinges on the purchasing power of the people living there. While urban parts of the country seem to have recovered from the pandemic shock, the rural areas are still limping back to normalcy. And it reflects in the quarterly results of companies which have a base in villages. FMCG major Hindustan Unilever (HUL) recently reported 9.66% on-year jump in its March quarter profit and 10.9% rise in its quarterly revenue, missing the industry estimates. Later, its Chief Financial Officer Ritesh Tiwari said that the FMCG market growth showed gradual improvement, with rural slowdown bottoming out. Total FMCG market volumes, which were declining earlier, have now become flat. While rural volumes continued to decline, the extent of decline further reduced in this quarter. He added that for the full year, volumes in rural areas fell 7% and it declined 3% in the quarter, indicating a gradual recovery. A declining rural demand has been a persistent concern for FMCG firms for nearly 2 fiscals in a row. According to a February Nielsen report, rural consumption had earlier declined for 6th consecutive quarters at the end of Q3 for FY23, with a growth rate of negative 2.8%. In terms of the value growth for the entire year, HUL said its rural growth was only 4%. Over the last year, consumer spending has been impacted primarily because of inflation. Consumers in rural India have felt this pressure the most, and rural markets see continuous negative consumption growth. FMCG firms with a strong rural presence such as Dabur, Marico and Godrej Consumer Goods, while still waiting to declare their Q4 results, have all cautioned against slowing or declining rural demand in their pre-results update. Dabur has cautioned rural demand is likely to remain muted, while Marico seems optimistic. It does mention that a healthy monsoon season will be critical. This cautionary stance regarding rural demand and dependence on the monsoon is in fact prevalent across sectors. Maruti Suzuki, which saw a 42% jump in its Q4 profits, is also keeping a keen eye on rural demand. In a recent statement, the auto major said unseasonal rains and the expected irregular monsoon due to El Niño could have an impact on rural sentiment, and an impact on rural demand can adversely impact the overall demand pattern for the automobile industry as well. For the auto industry, 30% of the sales are in rural areas.
Last sort of 5 to 6 quarters, rural demand has been slow, but there is a sense that the demand is now, that the slowdown in rural is sort of bottoming out, as some of the results of some of the large FMCG companies are also starting to show that the demand is starting to, if not revive, at least the decline has stopped.
So, will a decline in rural demand be felt across sectors in Q4 as well? If so, what are the major reasons?
For 2 reasons. One is that the very high rate of inflation. So, effectively, if you look at both the growth of rural wages as also the urban wages, both of them have been actually negative. So they simply start cutting on their consumption. This may not be so true of the urban areas where largely the incomes are protected, but that cannot be said about the rural population or a large section of the population who either earns their living on a daily, quarterly, monthly wages, or their income is linked to the crop cycles.
And how will this impact the larger economy? And in case rural demand continues to decline, will the government have to intervene?
If rural slows down, the overall economy slows down. Now, with the rural sort of starting to revive, or at least the decline slowing down, it means that consumption is again starting to grow in rural. Not so much subsidies. So agriculture is very critical. So having monsoons, having the right sort of technologies to help farmers, giving them access to markets so that they can sell their product, and also to be able to support the farmers on the pricing for commodities, especially on food products, is very, very critical. So also we are starting to see global headwinds, whether it's inflation, whether it's commodity prices, whether it is the supply chain bottlenecks. All of these are starting to ease a bit. So I think that will also help in terms of the overall sentiment, and also sort of especially interest rates. As interest rates start to stabilize and eventually come down, that will also have, give more money in the hands of consumers for them to be able to spend.
Their key focus would be to somehow protect the Kharif crop. The other bit government can do is that in these kind of situations, certainly government can encourage the farmers to go for a better mix of crops. And the third thing which government can do is, of course, support them through certain fiscal measures, through MNREGA program, or for that matter, transferring of some money into the accounts of the farmers and so on and so forth.
Experts believe, therefore, that even as monsoons will play a crucial role in determining the course of rural demand in the coming quarters, it will take some time to cross over from a negative to positive growth rate. However, if the monsoons are not favourable, the government will have to intervene to offer some cushion.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.